Morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Today is Friday, it's the 29th of April 2022, and I'm just going to bring up our high-risk investment warning. I'll just keep that on screen. And sorry about yesterday, my internet cut out mid-webinar, so I'm just keeping an eye on it today, and I'm begging your pardon. All right. Hey Raj, good morning to you. Nice to have you on the webinar. Thank you very much for joining. All right, here's our market commentaries disclaimer. I'll keep this on screen for a few moments as well. And our references FXCM Markets Scope 2.0, CNBC, and perhaps Trading View as well. Right, let's just start off with the CNBC. I'll keep the DAX chart on screen whilst we go through the headlines just to see what we need to be aware of. CNBC's headline reads as follows: European stocks set to climb on earnings boost, but on course for a negative month. Right. European markets are set to open higher on Friday as global stocks receive a boost from strong corporate earnings, but remain on course for a negative month. This is the monthly chart. You can see that we've got a red candlestick here. Okay. The Pan-European Stock 600 index closed Thursday session higher on the back of a host of earnings reports, but it's still down almost 2% for the month as investors enter the final trading day of April. Shares across major markets were buoyed on Thursday by a robust round of corporate earnings, with a positive session in Wall Street leading into optimism into the Asia Pacific. Shares on Friday, Hong Kong's Hang Seng index gained more than 2%. As tech shares bounced following a 3% climb for the Nasdaq. The US stock futures pointed to a mixed open today, with Nasdaq futures pulling back after Amazon and Apple's quarterly results disappointed. Friday was another busy day for earnings in Europe, with BASF, AstraZeneca, Record Eni, NatWest, Pearson, NTU Aero Engines among those reportings before the bell, while Daimler and Credit Suisse hold their annual general meetings. On the data front, the French economy stagnated in the first quarter of the year as weak domestic demand continued despite an easing of COVID-19 restrictions. The Eurozone's second largest economy was unchanged following growth of 0.8% in the final quarter of 2021, with economists in a Wall Street Journey poll having projected a quarterly expansion of only 0.3%. German, Italian, and wider Euro area GDP growth and inflation readings are due later this morning. Meanwhile, global investors continue to monitor the war in Ukraine and its geopolitical implications after Russian President Vladimir Putin warned the West of a lightning-fast response to countries that intervene in the war. Russia shocked the European community by halting gas supplies to Poland and Bulgaria on Wednesday because they refused to pay for gas in Russian rubles. And that's brings us to the end of the article. Sort of getting starting. Yeah. All right. Well, let me consider it, and let me know how we go with this webinar. All right. Something I actually wanted to do on Trading View, which we don't always get the opportunity to do. Let's just go through the monthly. I'm going to bring up Shanghai Composite here. Where is this? Let's do it this way. All right, I don't see. Let's use the skilling. Let's see what skilling's got here. It's not going to have enough data. Yeah, sure. If I can't find it, we'll just we'll move on in a moment. Oh, we'll come back to this. Let's go through to the DAX here. Okay, so we want more data, and I'll show you why we want more data. Because what we're going to do is we're going to take out the Bollinger Bands, and we're going to add in the COPOC, which we haven't looked at for quite some time. And I just want to talk about the COPOC indicator to you. All right, so what the COPOC does really well is it finds value out there, and I wanted to look at the COPOC. I wanted to look at the Shanghai with the COPOC. So I'll see if I can find that. The idea behind the COPOC, let's just understand what it is. It's really a good indicator to look after a violent, yeah, great mind single like, you know. The idea here is the COPOC is a terrific index to use after a vicious sell-off. It was developed by I believe he was a fund manager, a guy named Edwin COPOC, I think around about the 60s, but subject to correction there. And what he does is he takes a whole lot of rates of change. So you see he's got a 1411. He nets them off. Anyway, I don't want to get into the calculation now because, to be quite honest, I can't quite remember the exact metrics. But the idea is it's done on a monthly. It's done on a monthly chart. And what you want to see with the COPOC is you want to see it go under zero, which the DAX is not under zero. And once it goes under zero, it's kind of like the gun getting caught, right? The signal for the COPOC takes place when we turn up from under zero. Now, I want to be very clear here. It's not a cross of the zero line. There's a website out there, a popular website, that says the COPOC is triggered when it crosses from below to above zero. That's not correct. Okay, it's a popular website. The COPOC signal happens when it turns up from under zero. Okay, that's when we're starting to look for value. So this is the DAX after the global financial crisis. A little later on in 2012, it gave another signal over here. And now remember, we're on a monthly chart. Okay, we're on a monthly chart here. So we're looking at sort of trends. Okay, we kind of see it move up here. And if you just take a look at some of the US, let's use the trading view index here. Okay, you'll see that you're also going to get some really good signals here. So let's it's not infallible. It does give false signals every once in a while, but in terms of bear markets, I found this to be probably one of the better indicators out there in seeing when it's time to potentially start looking for value. So here's perhaps a false signal here, perhaps, but you can see this gives a nice signal. over there. Okay, this gives a nice signal over here. Okay, this gives a terrific signal over here. Okay, this is borderline, but we get like a, so this is after the sell down, it's borderline. Okay, so this kind of in hindsight a really good signal there. And Copop generally applied it to the risk market. What happens if we have to apply it, say, to commodities? So let's use the CRB, so the Thomson Reuters Jeffrey CRB index. Let's use that. See if there it is. See what kind of signals we get off that in terms of commodities. All right. Let's put in our 0. Okay, this commodity is obviously a little bit more erratic than the risk market, and the reason for that, it's they alternative assets, commodities. So you can see here, it's a nice signal there, nice signal here. Just move this there. There's a good signal here. Okay. This one's a poor signal. Okay, so that's a poor signal there. So that's a, as I say, it's not infallible. Okay, gives a pretty decent signal here, albeit with a big decline here. Here's a really good, signal. Okay, so that brings us right back to the Shanghai index. If I can find it, we can take a look at the commodities, but let's take a China 50. All right, just bear with me here. I'll see if I can find something that all right, let's do this. The China ETF. Okay. No. Okay, let's use this RShares. All right, let's see what we can see here. Okay. Let's put in the 0. Oh. Let's put it in the horizontal here. All right. So take a look here. There's clear value. With regards to this iShares ETF, specifically, that's the MCSI China ETF. Is that the one I chose? Yeah. Okay. And let's take a look at the signals. It only goes back to 2012, so we're a bit sparse on data, unfortunately. Here's a nice signal. Okay. Here's a nice signal. Now it's long term, right? So you've got to. This is only one part of an analysis. You can't use this in isolation. It's kind of top down. Take a look where we are now with China. So China's getting absolutely murdered at the moment in terms of the Shanghai Composite. It's just been absolutely smashed to the downside, and there's clearly sort of blood on the street. That's the time when you want to start looking for potential opportunities. Don't take this as buy advice. I'm not saying that at all. What I'm saying is it's now is the time to start taking a look to see if there is value out there. Is there value out there? Okay. The Chinese policymakers are still quite expansionary, even though it's a crazy sort of contractionary global environment. What we want to see is the COPOC turn up. So we've got no sign of that yet. So I don't know where COPOC's going to end. We're at -52. Maybe it goes down to -80, before it before it kind of turns up. But this is something that you certainly want to keep on your watch list now. It doesn't look appropriate according to the COPOC indicator quite now, but we are getting to a point where one would think in all this sort of capitulation that there has to be some good value there. There has to be some good companies that are dirt cheap at the moment. So you probably just want to keep this in mind. And it's just asked if we can do it with Bitcoin, and we certainly can. So let's bring up the Bitcoin chart, and just make sure your charts are logarithmic. For a long-term analysis, you want to keep it on logarithmic. I'll show you on Bitcoin in particular why that's so important. If we go through to Bitcoin, yeah. I'm just going to use the trading view index here because I think there's a decent history. Take a look what happens if you take it off logarithmic. Just the slope goes nuts. You can't. So it looks like you've got this sort of huge parabolic sort of rocket move here on an arithmetic scale. It makes a little bit more sense on a logarithmic scale. Okay, it makes a little bit more sense on a logarithmic scale. Let's take a look here. This is interesting, and let's see if we can make some sort of inferences from this. To me, it doesn't look like it's gone negative since we've got the beginning of the series. Let's just take a look. Okay, so we want to make this go to 0. Let's see where it puts it. All right, we're pretty close. We're pretty close. We're not there yet, right? We're pretty close. Now, let's see if we can get some decent signals here. So here, we probably go negative here. If I zoom in, let's just see here. If I zoom into this area, it goes slightly negative there. Very difficult to see where the turn up is. Let's just put it over here. And that's a pretty decent, signal there. Okay, it's a pretty decent signal there. This over here, let's take a look here. Let's take a look here. Okay, there, it also dips under 0. Okay, it also dips under 0. Probably turns up around about there. Let's take a look at all the data. Okay, and that's a pretty decent signal as well. Okay, remember it's a monthly chart. We're looking longer term. There is a bit of pain here, mind you. I mean, so again, I want to stress, COPOC in of itself is part of a toolbox. It's a top-down analysis. You don't use it as a standalone signal generator. Where are we right now? Well, we're kind of getting to that what looks like to be value. We're not there yet. So it's probably worth keeping an eye on. Whilst we've got Bitcoin up, just something that I noted yesterday. Okay, so Howard's actually giving me the segue into the next part. Howard says, but it's trading sideways. Yes, I would agree with that. So what we want to do is, let's get rid of the COPOC for now. Let's add in Bollinger Band width. Okay. All right, I did it twice. Sorry about that. Close it off. All right, I'm just going to make this a little easier for you guys to see. Bear with me. Okay, cool. And I want to change this to a weekly. I want to change this to Bitcoin to a weekly. We can also look at it on a monthly scale. Let's do it from the weekly first, Howard. Take a look at this. So go through to the weekly. Now, something I noticed yesterday. Let's I'll explain what's going on here in a moment. I just want to add in a horizontal line, and I'm going to put it at 0.4. I'll put it at 0.4. And what are we looking at here? So the question is, okay, cool, you've brought this up. What are you actually showing us here? So the Bollinger Band width is actually, it's derived from the Bollinger Bands. So what I'll do is I'll add Bollinger Bands onto the price chart as well. I'm not changing any of the settings. I'm just using Bollinger's default settings, which would be 20 simple moving average, 2 standard deviations. And every time there's a squeeze, so just bring the squeezes. Here's a squeeze. Okay, here's a squeeze. We get a narrowing here. Okay. We get a narrowing here. Okay. So what the Bollinger width does is it's actually measuring the squeezes on the Bollinger Bands. Okay. So what's the big deal about that? Well, Bollinger theory suggests that volatility cycles can be, I'm going to say this with sort of very sort of tentatively, forecast. Because when I say forecast, I don't mean they can be accurately forecast, but what he suggests is that contraction leads to expansion, expansion leads to contraction. So there's a cyclical nature to the volatility cycle. In terms of timing it, it becomes very difficult, but perhaps the Bollinger Band width indicator can help us to some extent. And the way that it may help us is, okay, going down under 0.4 seems to be the Bitcoin sort of sweet spot for volatility contraction. What happens when it jumps out? What happens when it moves above? Well, here's a volatility expansion to the downside. Okay, this one it doesn't quite go under, but certainly volatility picks up. It picks up to the upside. Take a look over here. It goes under, kicks up. Here's a nice volatility expansion to the upside. So Howard's quite correct. He's saying, but hang on a second, we're in a range, and that's exactly what the Bollinger width is telling us now, because volatility has narrowed and we're under 0.4. How do I get 0.4, by the way? 0.4 is a subjective measure. So there is subjectivity that I've added to this, so just bear that in mind. But the point is, we won't break out of this range, Howard, until the Bollinger width moves above 0.4. So yeah, we've got the low volatility, but according to Bollinger theory, that narrowing in the bands should lead to some sort of expansion. Now, the issue here, of course, is, well, which way is the expansion going to go? We don't know that. See, Bollinger theory talks about the volatility expansions. It's quite sparse on the direction of the expansion. So we've got to use other tools for that. And I think the obvious way to work on that deficiency is to add some sort of trend following indicator, perhaps some sort of momentum indicator that helps you get the directional bias when that volatility breaks out. So, well, we can go down to our stochastic here to get some sort of momentum reading. We can just use a plain moving average as a trend following indicator. Or of course we could use our zones. So let's actually use our zones here. So what we'll do is let's get rid of the Bollinger Band width. We know that we're in a narrow range. The question is, well, when do we get an expansion? Well, we'll only get the expansion signal after the fact. Okay, that's something we've got. Guessing when we're going to get it I don't think that's a good approach. We've got to understand that we're going to be late. We're probably going to be late to the Bollinger, to the expansion in volatility. But if we early enough, we should still have plenty to work with. Okay, so what we can do is let's get rid of this, and let's just tidy this this guy up. All right, I'm going to keep this on 20, but I'm going to bring the standard deviation into 0.75. So I'm going to squeeze it in, okay? And we're going to add a second Bollinger Band onto this, okay? So let's go back to indicators. We're going to add in the Bollinger Band. Okay, so my system's a bit slow. Yeah, I have clicked it. Let me just close this up here. All right, that was weird. Let me just adjust this. I'm going to keep this 22. So the first one we adjusted 22.75. This one we'll keep 22, and just take out the basis. And you guys know my color codes. I prefer a red for the 22. Okay. And we'll just take the background out. And now we've got now our zones, and this will help us with the directional bias. So we'll just zoom into this part here. And Howard said, well, we're in a trading range. Spot on. Look, we are, Howard. We're in zone 2. Zone 2 is our neutral area. Okay. You can see the squeeze here in the Bollingers. Which way is it going to move once we get an expansion here? Well, we have to see, is it going to go into zone 1? That would be bullish. Would it go into zone 3? That would be bearish. So at the moment, we don't know the directional bias on a technical basis. All we know on a technical basis is that we've gone into a range, and we know that on a technical basis that it's probably going to move into expansion. A few things that we can say: when we looked at the COPOC indicator, there's not really value here yet. So we must understand there's not really value here yet. What else do we know on a fundamental basis that is happening? We know that the dollar is on an absolute tear. Okay, so if that continues, I would expect that to pressure Bitcoin. And this is now the trick there. Well, what's the prospect of further dollar strength? And at the moment, I would expect that unless we see some changes in terms of Fed aggressiveness, unless we see some changes in terms of geopolitics, unless we see some sort of change in terms of China and Japan monetary policy, they're both expansionary, okay? The dollar seems to be supported. As long as that dollar seems to be supported, I think the Bitcoin has a price ceiling above it. I think the price ceiling. So we're just going to have to watch it. And Howard again just says, well, besides the fact that we are in neutral, we've got a doji here. So what's a doji? A doji is indecision. You've got bulls trying to take price up. You've got bears trying to take price down. Neither succeeded. Where are we right now, Howard? We're right where we started. Indecision. Absolutely right. So it's not going down against the dollar though. That's a good point. So Anna says, well, wait a second. The Bitcoin's not going down against the dollar. That's not what I said. I said as long as the dollar is supported, I said there's probably going to be some sort of price ceiling on Bitcoin. See, so yeah, quite right. And Bitcoin is holding its own. But the reason that it's not going up, is, in my opinion, it's because there's a ceiling on it. Why is there a ceiling on it? Because the US dollar is still pretty much part of the equation, isn't it? Now, imagine if the Bitcoin is holding its own in this type of dollar environment, Anna. Imagine what happens if the environment changes where dollar loses that support. I think then we see that ceiling disappear. So at the moment, we've just got this range and it's holding its own, quite right. It's holding its own, but it seems to have a ceiling as long as dollar is bid. Now, as soon as if something changes on the ground, dollar loses their bid, then of course Bitcoin needs to be on the watch list. Exactly, because we've got a squeeze. Now imagine that squeeze turns into expansion. Imagine it moves into zone 1. Okay, so that's something that we certainly need to consider as well. In terms of COPOC, we're not quite at value yet, Anna. So bear that in mind. If there is pressure on the Bitcoin and it goes down, then I think the COPOC does go negative. Then we can start looking for value on a technical basis. Shanghai, China 50, not quite there yet. It still looks like it's under pressure. Certainly though, one would think there must be some value in the Chinese market. There must be. We just need that. COPOC to suggest. Now, just one more thing before we wrap up here, because this is very important. We don't want to guess the bottom. We don't want to pick bottoms. We don't want to pick tops. Okay, because whatever we think the bottom is, generally we're going to be wrong. Whatever we think the top is, generally we're going to be wrong. So my preferred approach, and again, it really depends on what your preferred approach is. Let me just new save. Okay, is to let the market tell us when it's bottomed. How do we know when it's bottomed? Peaks and troughs. Okay. Higher trough followed by a higher peak. How do we know when it's topped? Lower peak followed by lower trough. So we actually we're quite late. We're quite late to recognizing that the bottom's in. That's cool. As long as there is still swings to go, we'll still get the majority of it, and then so we should capture this part of the move. Okay. So what we'll do is conclude at this point. Is there any questions? Please go ahead and type this through. Any questions? Please go ahead and type this through. Okay. All right, guys. Yeah, have a good weekend, and we'll catch up on. I think Monday might be a public holiday here. I'll just double check. If you don't get an invite, I've cancelled it. Otherwise, I'll see you on Monday. All right, Rob. And if anything comes up, just shoot me an email, and we'll take it from there. All right, guys. Chat to you next week.